Good day, everybody. My name is Jeffrey Beamer. I'm the senior investment strategist over at ewotrader.com, and welcome to Earnings Call. This week, we have about 160 companies declaring earnings, and that is this week, the week of May 19th. It is Monday, and we are just getting started with our trading week. And we got several big names declaring earnings this week, but the list is a lot smaller. We have about 160 companies declaring earnings, but as I mentioned, there's some big names in there, especially within the consumer discretionary and the technology space. So sit back, relax. We're going to get started here. And if you're not familiar with our show, what we do is we don't just talk about earnings, we talk about how to make money off of stocks who have earnings every week. So we're going to get into it right now. All right, we come to you each and every week with a list of candidates that we peel off. I'm looking at about 47 companies this week, and I select kind of the best candidates in two different categories. On the left-hand side, we have the breakout stocks, and on the right-hand side, we have the consolidating stocks or the quiet stocks. Okay, the breakout stocks, we anticipate moves greater than 10%, and the consolidating stocks are usually in the single digits. Okay, we're talking maybe even as low as 2% moves, just not very much at all. All right, so let's get into it. We do have a chapter feature at the bottom of the video if you want to go back and look at the stocks that we talk about each and every week. But the list is pretty interesting, and there's actually some good opportunities. So we're going to start with the quiet candidates this week. And right off the bat, we're going to start with an example here of what a quiet stock is. Now, Pfizer does not have earnings this week. All right, they had earnings recently, but this is a perfect example of a quiet stock. All right, not only does it not really move very much because it's just such a big company, but it doesn't move very much through earnings. And we do certain strategies where we can make money with the stock not moving. And those strategies utilize options, and we are most of the time selling iron condors, or we're doing condors or even butterflies. But I like the condors and iron condors just because it gives us a bigger range of profitability. And we do that each and every week on these quiet candidates. So let's get into our list this week. We're going to start off with trip.com. And you can see the list here as we zero in on these quiet candidates. We got some big names, including Palo Alto Networks, Home Depot, Toll Brothers, TJX, Ross Stores, and others. So the retailers and consumer discretionary specifically are big on the list, as well as technology. So trip.com is the first stock we're going to look at if we jump over to the chart here. Now, this is on the higher end of our quiet stock list. Trip.com is going to have an estimated move right now of about 8%. Now, these estimates are not what we predict. They are what the market makers are predicting. And how we determine that is through the option prices and how the option market makers are setting prices around the stocks that have these earnings. And are they expecting big things, or are they expecting not much at all? Okay. And they are notoriously accurate. Now, do they get it wrong sometimes? Absolutely. But most of the time, they are notoriously correct or near correct on their estimates. So when we talk about a quiet stock, we're probably talking about a stock not moving more than 10% at all. All right. So trip.com is, it's a $66 stock. It's in a good uptrend. It has been consolidating for about the past week, and it will have earnings today after market close. So that's today, May 15th, Monday, May 19th. Monday, May 19th, after market close. And the estimated move here is a little less than 8%. Now, next on our list is a former high flyer, and that is Palo Alto Networks. All right. This stock, again, is a stock that has quieted down. Okay. And, used to pop pretty big around its earnings events. But over the past year and a half, it is just not been moving big at all. In fact, the estimated move for Palo Alto Networks is less than 7%. Okay, now they are going to have earnings on Tuesday, May 20th, after market close. And as you see here, the estimated move is less than 7%. Now, with a stock that's trading in the low 190s, these are sometimes pretty easy candidates to trade, okay? Because these bigger companies, as far as stock price, the option premiums are usually a little bit beefy, so to speak, and carry more value. And that way we can go out of the money usually quite a ways and still collect decent premium to create an iron condor and try to have a successful trade on a stock that's going to move less than 7%. All right. And that is the estimated move here on Palo Alto Networks. All right. Now, next on our list is a big name in the consumer discretionary place, and that's Home Depot. All right. Home Depot will declare on Tuesday, May 20th, before market open. So tomorrow morning before market open. And this is one of the stocks that I was talking about off the top of the show was, look at that estimated move. It's less than 3%. And this is a $380 stock. All right. And this really gets into the consumer that wants to refurbish their home or make repairs. And sometimes they have to, if times are tough, they have to sacrifice that a little bit. And Home Depot's numbers, maybe they're average at best. And that's why this stock just really doesn't move. And this is a $380 stock. And just so you know, we do have two subscriptions. One focuses on these quiet stocks. The other subscription focuses on the breakout stocks, where I send out recommended trades during the week. And Home Depot is one I did for our Delta Neutral Income subscribers just this morning. Okay. Got decent pricing, around 6% out of the money. And Home Depot will have earnings tomorrow morning, and we'll see how that a particular stock does. All right. So next on our list is Toll Brothers. Now, this is a luxury home builder. They are usually on the higher end of the kind of custom home price range. Not the supermodel homes, but their communities usually are, there's usually $1 million homes in their communities. And it seems like that base number has been increasing over the years. I remember when the average Toll Brothers home was below $300,000, and then it just kept climbing up. And as I go around my community and I see the Toll Brothers communities, right now they're starting at 1.5 million and going up. Now, right now they have earnings on Tuesday, May 20th, after market close. And again, this is one that's hard to judge. It's up there. 9% is the top end of what the market makers are anticipating this stock moving. And so priced at $106, you could possibly get a good trade off on Toll Brothers as well. As there's usually on $100 stock, the premium is pretty decent up at those levels. So, going out, try to go 10% above and 10% below the stock prices where you want to sell premium. And, for Toll Brothers, it might be a little difficult, but I haven't looked at it yet this morning. So, but that's pretty typical for Toll Brothers. So again, Tuesday, May 20th, after market close, and the estimated move here is on the upper end of our range, under 9%. Now, believe it or not, Medtronic is also on our quiet list. They are going to have earnings this week, Wednesday, May 21st, before market open. And the estimates right now are coming in for less than a 5% move on Medtronic. Now, this is a $86 stock. And, just, I don't know, by the name, this used to be a high flyer. And lately, over the past year and a half, which is the past 6 earnings cycles, this has really not moved very much through those earnings cycles. So right now, the market makers are pricing in a move less than 5% for Medtronics, which declare on Wednesday before market open. And that is the 21st of May, which is this week. All right, going back to the retail group here real quick, we have TJX, so TJ Maxx stores. They will declare Wednesday, May 21st before market open. The expected move here is less than 6%. Now, this is stock has been moving quite a bit, as you can see here. a low on the chart that you can see back in mid-April, or actually late March there, at $112, and now it's at $134. We're not really concerned with the long-term trend here, because when we sell premium on these, we're doing very short term. All right. And we're trying to take advantage of implied volatility crush on those options, where right now the implied volatility in these options is getting more expensive as we go into that earnings announcement. Once the announcement's made, boom, drop that IV drops. And that is one of the ways that we make our money on these trades. So TJX, again, earnings on Wednesday, May 21st, before market open, and the estimated move here is less than 6%. Moving on to a company that we're all familiar with is TD. All right, formerly known as Toronto Dominion, but they will have earnings on Thursday, May 22nd, before market open. And the expected move here is less than 4%, which is typical for a big investment firm, big investment bank. So pretty quiet for TD. And again, the earnings is on Thursday, May 22nd, before market open, and a move less than 4%. Now, a couple of more here. The Autodesk is a former big mover, but no longer, and it will declare on Thursday, May 22nd, after market close, and the expected move here is right at 6%. All right, and this is again a stock that's up near $300. Could be pretty easy to create a decent trade where you can collect premium going into that earnings event, and then the stock doesn't move very much, and boom, that's how you make your profit. So we will be looking at Autodesk here in a day or so, because it doesn't have earnings until Thursday, and we want that IV to get elevated as much as possible going into that announcement, and take advantage of that. So we will be watching that. They declare Thursday, May 22nd, after market close, and again, a move of right at 6%. All right, now Ross Stores, back to the retailers here. They will declare on Thursday. Sorry about that. Got 2 days in there, so we'll take out Tuesday because it is Thursday, May 22nd, after market close, and the expected move here is 8%. Now, again, this is another stock that's rallied very nicely here, but again, we're only concerning with that earnings event itself. Okay, and the IV that will crush after that earnings announcement. So a big potential mover relative to other retail stores, but not for us. Okay, single digit moves just don't really, they don't really make the radar of something very exciting. But it's getting up there. Okay, 8% is on the higher end of our quiet range. Now, okay, so that's enough for Ross Stores, but I want to talk about another retailer and another tech company. Imagine that. And I did not include these on our list because they're kind of like Ross Stores. They're up there in that upper single digit range. And one of those is Ralph Lauren. Okay, so RL is the symbol. This is a $277 stock. They will have earnings on Thursday, May 22nd, before market open. So Thursday morning. And the estimated move here is 9%. Okay, so it's getting right up there. It could really go either way. It could gap, double digits and then pull back, or it could move very little and then rally. So these are kind of hard to call. Okay, and that's why you got to be really careful. And if you want to do a breakout trade, which I'll talk about in a moment, that is okay, but you got to get your pricing to where you only need maybe a 6% move or a 7% move, something really, really tight. And then, if we get a 10% move out of the stock, you can still profit. And it's right still within that 9% range. The other stock I wanted to talk about on the quiet end is Intuit. Look at that, $674 stock. They're going to declare their earnings results on Thursday, May 22nd, after market close. And the average move here is actually less than 8%. Okay. It's right there on that upper end of the range. And May 22nd, aftermarket close for Intuit. So those two didn't make the list because those are kind of harder to call, and Intuit kind of has sometimes some difficulty being a $600 stock. Option premium is usually pretty beefy, but sometimes with stocks like this, the pricing is every $10 instead of every $5. So when you make your $10 wide trade, then that's your margin. You have $10 of risk minus your credit. Okay, the credit that you receive for selling maybe a vertical spread like a bear call spread, which is the top half, and then a bull put spread, which is the bottom half of that trade. Okay, usually stocks like this, it's every $10. So sometimes you're looking at $800 risk or so for every spread that you do, and usually I'm a little bit more conservative than that, and I don't like doing that. That's why I like stocks that have spread or like strikes every $5 or even every $2.50. All right, so that's our quiet list for this week, and I just wanted to include those last two stocks of Ralph Lauren and Intuit since they didn't make our list, but those are pretty well-known names, and we want to make sure that we hit those names before we move on. All right, so let's get over to our breakout stocks. And just a reminder, if you like this content, because we do talk about how to make money with these stocks, please like or subscribe to our channel, and that will help us reach more traders like you. And we can do that each and every week and expand our reach and expand our watch base, and that's always a good thing. All right, so now we get to the breakout stocks, and these stocks are pretty exciting to watch. All right, because they tend to move pretty big. And we start off the week with two companies you might not be familiar with, Agillysis and Transcat. All right, and then we get into stock companies that are a little bit more well known, like Target and Urban Outfitters and Advanced Auto Parts and Deckers. Okay, so it's a combination. All these companies are potential big breakouts. So what does a breakout stock look like? Okay, well, one of my favorites to look at is Akamai. Sorry, mind AKAM. I know them all by symbols, and sometimes I forget the names. Akamai, AKAM. Now, Akamai does not have earnings this week. This is just an example of what a potential breakout candidate looks like on the chart. Okay, so you can see the earnings dates with the vertical dotted red line, and then the earnings results, the move results with the little ellipse or the circle that we have. These stocks can really move big around the earnings event and move big double digits. So we do a different type of strategy with these. We actually buy premium. Yes, the options are getting expensive, but they're getting expensive for a reason. Okay, and that is the potential for a big move. So what we're doing here is either creating a straddle or a strangle. Okay, that's buy call, buy put, and a straddle is done at the same strike prices with the same expiration, and the strangle is two different strike prices, for one for the call, one for the put, same expiration date, however. Okay, so I go through a process of how I choose which strategy to use. And that's one of the benefits of subscribing to our Delta Neutral Breakout publication. Okay, so that's what we're looking at here. So let's go back and let's just jump into our list, shall we? Okay, let's start looking at our stocks. We're going to start with an example of something that it's a little hard to trade. Okay, the first two stocks are going to be a little hard to trade, but I did want to talk about them because they're very interesting. So Agillysis here is a stock that, as you can see, they declared today after market close. The move is greater than 12%. That's the estimated move here. And for an $85 stock, usually that's pretty affordable for any size trading account. But here's the challenge. They do not have weekly options. All right. So we have to go out to July or June, I believe, to do any sort of straddle or strangle. Okay. I think it was 32 days till expiration. So quite a ways out. And the thing with this is that you're buying a lot of time, but you want to make sure that with the move, because the move might not make it to your break evens. Say the move is 12%, yet you need the stock to move 13%. Well, that's okay if you have enough time in your options. And what you want is for that stock to really keep moving. So I see here that this stock at the end of April was down here around $65, and now it's up at $85. That's a $20 move in a month. Okay. So if I've got to go out to June with these options and buy June options, I might have a chance of making a profit on a combination of a big move and then follow through pricing. Okay. What I don't want is for this to happen like down here where it drops and then it stops and then it starts to rally back within that 1 month period. That would be disastrous. So you got to be careful with this. But here's an example of a stock that's a little difficult to trade, even though it's got that double digit move. And so does Transcat. Okay. So Transcat, it's making a nice consolidation pattern here right at $80 and going into earnings. And look at that. They have an estimated move here of greater than 16%. Now, as I pulled in more data, as you can see here, this last earnings event, look at that drop. And then it followed through the next day with another double-digit drop. So 2 double-digit drops in a row for Transcat. And then look what it did. It just kind of consolidated between $70 and $85 in a $15 range ever since then. And now it's consolidating even more. But this has the same problem as Agillysis does, is it doesn't have weekly options. So you've got to go all the way out 30 days plus. And if that's the case, look what this stock did after earnings. It moved a little bit, but it rallied up and then came back down. And again, that's a horrible situation if you have a straddle or strangle on. You want it to move one direction and just go. Okay. You maybe here, if I was able to make money on my, say, my puts, and then it started to rally up, I took the puts off and then I made money on my calls, that would be a different story. And that's happened before where we just let the untested side go. We don't even touch that. We just leave it as a lottery ticket, and all of a sudden the stock reverses and hits that other strike, and we got a double-digit winner on both the call and the put. But that's the only way that happens. So Transcat here, a little difficult to trade. So let's get into some that might be a little easier. Okay. Excuse me, I had to clear my throat real quick. So let's start with AMSC. Now, this is American Superconductor, and they are typically a mover, okay? And this is a nice $24 stock, and you can see that they declare Wednesday, May 21st, after market close. The expected move here is greater than 18%. Now, this is typically a mover, and if we go back, you can see how last earnings cycle, and I don't have it identified here, but it's right here. This stock didn't necessarily gap, but it sure did drop hard after that earnings event. And then we go around and we see another earnings event where this stock popped, the consolidated for a couple of days, and then took off again. So again, giving yourself enough time to be right is critical sometimes when you don't get that big move all at once. American Superconductor, its history is it'll move pretty big, and then there's follow through, and that's what we like on some of these. As you're going to see in a moment with one of our trades that we did 2 weeks ago. So you want to stick around towards the end because that same scenario happened with one of our trades that we actually had a very nice winner in. So you want to hang on for that. Let's move on to Target. Believe it or not, Target, big company, been around a long time, but Target is a mover. Okay. They will declare on Wednesday, May 21st, before market open. The estimated move here is greater than 12%. They are looking for a move greater than 12% for this, for Target. And you can see the last earnings cycle. Oops, sorry, my screen chart jumped. Okay. Last earnings event here, stock gap down. And then we did get that follow through to the downside within about a week or week and a half. So that would be the same thing kind of here. We would expect a double digit move and maybe some follow through, as it has been consolidating for a while. So that's something to watch later this week on Wednesday morning, right before market opens. Target will declare their earnings results, and we will see how this retailer does. Another retailer is Urban Outfitters. Okay. Stock has rallied here very nicely in the past few days. They will declare on Wednesday, May 21st as well, but they will be after market close. The estimated move here is double digits at greater than 12%. All right. So for a $6 stock, you're looking for a $6 or more move, which would be 10%. So you're looking for a little bit more than that. And so maybe $6.50. So that is where you want to set up your straddle or your strangle. If you can get maybe a single digit move for your profits on top and bottom, that's how you would do it. And how you calculate that is you take your strike price plus your debit and minus your debit, and you get your upper and lower break evens. That's how to calculate that. So here with Urban Outfitters, definitely a stock we will be watching for later in the week, as well as Target, because both of those are pretty consistent winners in our books, and we like them both. All right, so Urban Outfitters, Wednesday, May 21st, after market close. Estimated move here is greater than 12%. Now, another inexpensive stock is Advanced Auto Parts. They have earnings on Wednesday, May 22nd, before market open. The estimated move here is greater than 15%. All right. This is a mover. All right. This thing moves around. You can see the last earnings event. This stock just gets thumped and then falls out of bed even more after the earnings event before catching a little rally and then making new lows. All right. So it's been consolidating here right around this 32.5 number for quite a while. And that's what we like to see going into earnings for a double-digit mover. All right, so this is an inexpensive stock. Your straddle or strangle could be, $300, $400, $500, somewhere in there. I haven't priced it out yet, but I will definitely be watching Advanced Auto Parts as they have earnings Wednesday, May 22nd, before market open. In fact, I do believe I did price that out one day, and let me just see if I still have it up. No, I don't think I do. No, I don't. But I think it was right around. I just don't remember. It was looking good when I first priced it out, but things can change. Okay, and this is all the secret here is all about pricing and making sure you get the best price, meaning the lowest price for your straddle or strangle going into that earnings event, and that's what helps you generate winning trades on these types of stocks. All right, we just have two more to go. Deckers Outdoors. All right, they will have earnings on Thursday, May 22nd, after market close. The estimated move here, greater than 14%. All right, this is consolidating nicely going into that earnings event. I do like that pattern here, so we will be watching Deckers closely, see if we can get good pricing on it. It is a $127 stock. So you could definitely be, $1,200, $1,300 or even more on your straddle or strangle. That's why you got to be very careful, because the pricing of these starts to get a little bit more expensive, especially when it's a more expensive stock. All right. That's why it's, a good, just a good plan to subscribe to a newsletter like our Delta Neutral Breakout publication, because I do all the math for you and I avoid the ones that are going to be obvious disasters, and we try to get an edge in every single trade, and that's what I look for in these. And sometimes the edge is there, and sometimes the edge is not there. All right, we're going to close out our list watching this week with Workday. Workday will have earnings on Thursday, May 22nd, after market close. The estimated move here is actually greater than 12%. Okay, greater than 12%. For Workday. And again, I like the consolidating move that the stock has right here. Even though it's, past 3 days, 4 days, that could ultimately be 5 days going into the earnings announcement. And then we expect a double digit move out of Workday. Now, this is a $273 stock. So you could be looking at $2,000 to $4,000 for a straddle or strangle on this. This is where you got to be really careful, because it's not that these really expensive ones won't make money, but you need them. You need them to move. And what I like about this is that, in the past, let's take the past 2 weeks, okay, which is right about here. The stock has gone from 248 to 273. So the stock has moved $30 without an earnings event. I like that. Okay, so if I did a trade like this, it's all about the amount of time you build into your trade. Okay, and you don't want it to be too expensive, but you definitely want to pay for the time and the potential movement of the stock in a stock like Workday, as well as all of our other breakout candidates. All right, so speaking of breakout candidates, we've done a couple of those for you here the past couple of weeks. In fact, before I get to those, let me show you the list one more time, because there are some big names on that list. As I mentioned, really starting tomorrow with Palo Alto Networks, Home Depot, Toll Brothers, all on the quiet list. And then Wednesday, we fire up with some of the good breakout candidates with AMSC, Target, Urban Outfitters, and on the quiet side, Medtronic, TJ Maxx, and Baidu. Actually, didn't talk about Baidu just for time. Because of time. But then Thursday, we have Advanced Auto Parts, Deckers, and Workday are our breakout candidates. And our quiet candidates are TD, Autodesk, and Ross Stores. Those are some of the more quiet stocks that we're looking at for this week. All right, so let's move on and let's talk about our trades. We did have an open trade last week. That last week when we looked at this was a little bit of a loser. But this is what happens when you have patience and the stock starts to move, is it turned into a nice winner, a very nice winner. And that was our open trade on Dutch Brothers. Okay. Now we were in this trade for 10 days. That's 2 trading weeks. Okay. And we did a strangle on this. As you can see, the black line there that is on its side has a flat bottom to it. Okay. This flat bottom. And that indicates that it's a strangle, because your strike prices are anytime you see an angle, that's a strike price. Okay, so 2 strike prices, a call and a put. The stock gapped up on earnings, actually moved higher on earnings, and then 2 days later it gapped up and then just started walking higher. We did take this trade into expiration Friday. On Friday, we closed it out Friday afternoon, and that was for a profit of over $400, which was a 61% rate of return on risk. 61% return on risk in about 10 days. Okay. Now, this was based upon, this was one of our delta neutral, would have been in one of our delta neutral breakout and not our delta neutral breakout high value accounts. The difference between those two is delta neutral breakout just has a $10,000 minimum. So that would be a 4.24% return on portfolio in just 10 days. Okay, so very nice. You get these very nice returns out of these. And then last week, we did a straddle. Okay, so let's take a look at Nextracker. Nextracker was our candidate for last week, and this would be a straddle. Notice how the black risk graph there on the right has a point to it. Okay, and those are where your call and your put are at the same strike price, and that was at $50 was the strike price. And we look at that. The stock had actually gapped up the day before earnings, indicating to me that this was going to be a mover. It could move big again. And let's see how this trade did. Okay. We didn't have to wait long. The stock declared earnings. The stock popped up and then started running a little higher. So let's look at where we closed this out. We closed it out on Thursday. And look at this. We get another gap the day before earnings. So Monday, when we put this trade on together, okay, the stock had gapped up. Then the next day, it gapped again and then consolidated for a day. And then look at that big candle. And we ended up again with a over $400 profit. That was $470, which was a 67.1% return on risk in just 4 days. And that is the power of these breakout stocks. Okay. When they start to move, they can really move. Okay. and you know pretty quick if you're going to be right or you're going to be wrong. Okay. You know pretty darn quick. You don't have to wait very long. So, what do we have for you this week? All right. Well, for this week, we're on a roll here again. We've had several winners in a row once again. So, we are on a roll, and that is a good feeling to have. So, we are going to look at another breakout candidate, and that will be Deckers Outdoor. All right. So, Deckers has earnings later this week, as I mentioned before. All right. On the May 22nd, after market close. And the stock is, look at that, nice consolidation. We're going to do a strangle on this. It's going to be about $1,200 for that. Okay. Is the number, okay, is the debit. So you're going to need an account of at least $25,000. And the reason for that is I don't like to risk more than 5% of my portfolio on any one single trade. Okay, so if we did that, then an account of 25,000 would satisfy. So this is for a little bigger accounts, and this would be a strangle on Deckers Outdoors. So next week, right here, we will talk about this trade, how it did. We will have our complete list of stocks that have earnings for next week as well. So lots of activity going on right now. We are still in earnings season. In fact, earnings season never really ends before the next cycle starts, which is what I love because there's always activity. And these are really short-term trades and really fun to do, especially when they make money. So please visit our website at ewotrader.com. You can learn more information. I have a free guide there. Down at ewotrader.com/straddle, which goes into detail of how I trade these stocks around earnings. And I'm talking these stocks, I'm talking about these big potential double-digit movers. And that's what that guide will show you. So everyone, I enjoy being with you each and every week. Please like and subscribe, as I mentioned before. Love being with you. And everyone have a great trading week. And I will see you again next Monday right here. Everyone have a great day.